Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar come off a bit and the euro take a move up here in Asia, as well as the dollar yen move up, make a run up here. Actually, came up here right to where we were looking for as far as our resistance in here on the dollar yen. That's what we were looking for yesterday. A move up here, our resistance, which is going to be 1187 here on the dollar yen. We did have Bank of Japan yesterday. We've also seen the Aussie yen make a move right into our resistance also. 79.15 was our resistance here to the Aussie yen. I'd move that higher. Remember, we were looking for a move up to around 79.10, 79.02 was a 61% on the Aussie yen. And we had actually talked about 79, moved to 79.10 yesterday. We said, well, look, it'll be 79.15. That's going to be the area. And we did go on and make that move up in here into the Aussie yen. And there was our resistance right there to come in, right there, 79.15. I actually got up as high as, what, 79.25, just kind of holding in here. Dollar CAD is back on the dip again. So we'll see where that goes and takes us. I'd actually basically from a couple days ago bottom ticked it. Some of us were looking for it to come in here. Unfortunately, I didn't stay on it for that long. I thought we'd once again make a dip as oil moved higher. We pushed up a little bit way further than what I thought. I would have thought we'd taken another dip, then jump back in and then ride it up. Well, we only made that dip in Asia, early Asia, and quickly just started to move a little bit higher. We're pushing back. We'll see where it takes us. Probably make a move down into about the 32.70s, maybe a little bit lower. Although I'm disappointed here that we came that far up. So we may have to do further work here in the dollar CAD here. Dollar Mexican peso is still continuing to move lower. But this dollar CAD, that was a bit of a disappointment. I thought that we would taken one more trip lower. I was looking for here, then another trip lower, and then the pop back up. So if we're still pushing lower, we may have to move that. Like I said, here's that move down, probably make a move down to 32.71, maybe even a little bit lower down to the 60s. Kill made its dip back in here, but we're holding against this 32.13 area here. A little bit of a hammer here on the 2-hour. And the euro, after taking a dip, we did have support here, 12.91. I was mentioning in the chat room. I think our bias chart was lower, but I was looking for that support coming in there. Yeah, 12.82. But we didn't even make it to the 12.91. We weren't that far away from it, but in Asia, we started to move a little bit higher. So let's go on and move into the news and see where we stand, and we'll do the analysis for the day. Brexit, third time lucky for May's deal. Once destined to go down as a milestone in British history, will now be a spring Friday, much like any other, assuming, of course, the European Union begrudgingly agrees to the request to the Brexit delay that Britain has now accepted it will have to make. The two other takeaways from this week are voting and that a no-deal Brexit now only really can come about by accident and against the will of Parliament, and that Theresa May remains just about in control of proceedings despite a palpable weakening in her authority. As was already clear yesterday, she will now seek to persuade 80 or so hard Brexiters, the DUP and other waverers, to finally back her deal in sometime next week by threatening them with the prospect of a much longer delay to Brexit. Some of them are sounding more conciliatory. On the other hand, a local media report this morning suggests that an attempt to feed them with clarified legal advice on the temporary nature of the Irish backstop has failed. The European Central Bank may have missed its opportunity to raise rates before the next downturn, according to a Reuters poll that shows the majority of central bank policy watchers aren't confident they will. If they are right, the ECB has missed its window to tighten its policy. Populist national politicians seem to be a fashion across much of Europe right now, but not it would be appear in Slovakia. Well, moving on, I'm not going to spend too much on politics at all. On to the markets. Beware the Ides of March. A fair amount of news out there could swing markets. None of it's particularly good, but stock markets seem determined to make the best of it. Global stocks appear to be shrugging off the talk. North Korea might suspend nuclear talks with Washington, and Brexit is going to be delayed. They're up and set for a weekly gain. First of all, thanks to tenuous hopes of progress in U.S.-China trade talks, even though Treasury Secretary Steve Mnuchin confirmed a Donald Trump-Xi Jinping summit will not happen at the end of March. There's also renewed hope for Chinese stimulus. Premier Li Keqiang outlined broad policy steps to prevent a sharp deceleration in growth. Those operations helped markets such as Tokyo, where shares of companies exposed to China soared. After last week's European Central Bank meeting, it's pretty clear there's no major central bank that will contemplate any policy tightening. And let's see, inflation is forecast at 1.5%. We also get data on U.S. February industrial output and March Empire Index. Markets were also unimpressed after this week's vote on Thursday in favor of delaying Brexit, as proposed amendment for a second referendum failed. Sterling appears to have settled to a wait-and-see, and PM May expected to try and resurrect her hated withdrawal agreement to another vote next week. Her third attempt to get it through Parliament before she goes to the EU requests that extension. The dollar is down following unimpressive weekly jobs data on Thursday. The promise of more Chinese stimulus has lent a helping hand to the Aussie and Kiwi dollars. Also, major Europe stock futures are in positive territory, with the trade-sensitive DAX leading the pack of 0.2%. And looking on to data, let's see. Eurozone inflation comes up in another hour, or the top of the hour, I should say. And let's see here. Industrial production comes in at 9:15 a.m. Eastern time. JOLTS job openings at 10 a.m. Eastern. I'll probably move the market a little bit. And that's it. That's it. So we've got the Canadian manufacturing sales comes in at 8:30 Eastern. Moving on, the Canadian dollar reverses from a 10-day high on U.S.-China trade uncertainty. So one point they're saying they like it. The other part, here's on the Canadian side, they don't like it. The U.S. dollar had been firm overnight on weaker than expected Chinese data. That's really been dragging on developed currencies lower, said Bipan Rai. If things do go sour in regards to China-U.S. negotiations, commodity currencies like the loonie will be hit. The loonie fell as Statistics Canada data showed the ratio of Canadian household debt to income widened to a record 174%. Now, new home prices in Canada is down 110% in January, following the 5 unchanged months of a row. Separate data showed. Bank of Canada Deputy Governor Carolyn Wicks is due to speak later. Now, that was Thursday. We had already covered that. She did speak yesterday. Pound pauses after UK vote on delay. Yen ticks up on BOJ. The British pound paused for breath on Friday, but stayed on course for its biggest weekly gain in 7 weeks after the UK Parliament voted to seek a delay in Britain's exit from the European Union. The yen was off week lows after the Bank of Japan kept its policy on hold and a report that North Korea is considering suspending nuclear talks with the U.S. Against the euro, the pound retreated to 85.45 pence per euro. British lawmakers approved a motion setting out the option to ask the EU for a short delay. There's been a soft consensus in the market that Brexit will be delayed. The things have been moving in line with that, said Kiyosuke Suzuki. But tail risk has not completely disappeared yet. The next week's EU summit will probably be the climax before UK Prime Minister Theresa May meets EU leaders on Wednesday and Thursday. The yen back from a 1-week low of at 111.83 per dollar touched on Thursday after Russia's TASS agency reported North Korea's vice foreign minister said the country is considering suspending nuclear talks with the U.S. The yen also had a mild boost as the BOJ kept monetary policy steady, though it expected to stand pat. Their expectations that Governor Haruki Kuroda could make a stronger show of its readiness to ease policy at his news conference. It'll be wise for the BOJ to keep markets believing that way. There's no reason to crush such expectations. Kuroda could express his willingness to ease if needed. And moving on, the dollar set for its biggest weekly drop in 3 months. We're coming to the end of a very exhaustive week in currency markets with the Brexit news, and investors are waiting to get in more insights from the Fed. Antipodean currency set by the Australian dollar and its New Zealand counterpart were the biggest gainers against the dollar after Beijing said it can use reserve requirements and interest rates to support growth. The yen remained firm after the Bank of Japan kept monetary policy steady but tempered its optimism that robust exports and factory output would underpin growth. And gloom forces central bank and Japan to temper its outlook. Factories across the globe slammed on the brakes last month as demand was hit by the U.S.-China trade war and the nod to increase rates. The BOJ cut its assessment. It's true Japan exports and outputs are affected by slowing overseas growth, Kuroda said at a briefing after the meeting. On the other hand, domestic demand continues to grow, such as we maintain our baseline and view that the economy is expanding moderately. The sharp deterioration in exports and industrial production should be a serious source of concern for the BOJ. I think the BOJ is doing some thought experiments about what they can do, said Masayuki Kishikawa. So moving on to the analysis, let's go on and get there. And see how we stand for the day. Well, we had our resistance here, 1360 and 40, and the euro really didn't come up to that shape, although we're pushing a little bit higher here. The key is still going to be 1340 as a key for a daily close resistance, and we'll take a look where we stand here in the euro. Well, you can see how important that 1340 has been on a closing basis. If the dollar were to take a tumble and we get going here, then it's going to be, we're talking about this 1369 here. That's going to be right there. At this point, if the euro does get its stretch here, if we do get that extra stretch here, and it doesn't appear to be the case so far, we're starting to slide back, but that would be key, especially if we close out the week. We could push it as high as 1369, but the key would be 1340 on a daily close. Support, well, we're going to keep this same 1282 right here. You can see that here we've got this, let's set up on a 30-minute. That would be the support here. Let's go and move into the cable. Well, a couple of days ago, we had a pretty nice little rip up, and then yesterday was relatively quiet in light of what we've seen, or the volatility we've seen. Look at these big moves in here after three big moves. And then we stayed relatively quiet yesterday, just pressing a little bit lower here. Taking a look at where we stand today. Resistance is going to come in right there at 133. I don't see anything changing, but that's that key daily close. So I'll tell you what, we'll go like this. There we go. 33 with 33.74 being that key daily close. If for some reason the cable decides to pop up and say the dollar were to take a dip. Support would be right there. If we take this dip, here's going to be this key 31.58. I'll actually push that just a little bit here lower. 31.51 if we take a good little slide here as we close out the week. I don't think that's going to be the case, but we're going to go with 31.51. Let's go move into the Aussie. Well, our resistance has been the same right here, which was this 70.91. And I just didn't see much of a move beyond that. We did get a little bit of a pop with this whole talk about China once again trying to do what they can to stimulate. Remember, we even referenced that yesterday. Remember, we said about 5 weeks ago, it was every single day they had a ramp up for some kind of stimulus. Look, that thing's going down. That economy's going down like a submarine. It just continues to be lower and lower, and every it seems like every key report is the worst in the last 4 years, 16 months. It just keeps ratcheting down, which once again surprised me what the heck the S&Ps are doing up in here. Let's see here. Now, how much further pressure will get down from here, we'll see. But I'm saying is, I'm still keeping in my 70.91. I think I've had that resistance pretty much all week long here. I think it was on Tuesday we finally adjusted up or something like that. I think it was Tuesday because Monday I don't think it was that high. But it's been, I'm not changing that. It's going to be the 70.91 at this point. Although we've been oversold for quite a bit, some time. Support, we'll put it right there. Actually, right there, 70.44. 70.44. Well, we're trying to get a little bit of a hammer right now in the daily here on the Swissy, just a minor hammer. Looking here, let's go move into the 2-hour chart. I like this area of support right there. You see that? Coming across, and that's where they found support, actually par 19. That's where we're going to go with par 19, which was those lows here. Resistance here is going to come in here at par 70 we get that bounce. Par 70. Right here. And let's move into the dollar peso. Well, this dollar peso continues to weaken here. Really in the situation of really applying that pressure here. If we do slide in, resistance, support would come in right down here on this slide, right there at 1920. $19.205. And resistance comes in right there at 1931.6. 1931.6. But it's certainly looking like it'll set itself up for a bit of a washout as we close into the week, which should drive us down in here. So we'll see how we close out this week. Let's go and move into the crude oil. Wow, this thing is unbelievable. Still showing good strength. And you know how people don't like to sell crude on a Friday, so that really can open the door for us to even push even higher. There's 58.90. Oh, 58.90. 58.96. Let's go with that for resistance. Nothing I see definitive here, so just get rid of this. Boy, they are just squeezing these shorts. If there's anyone that's short here, look at this 2 hour. You thought, okay, now we got a little bit of a hanging man, but then we just keep pressing it higher. Support. Would be right there, 57.98. Actually, push it right there, 57.89. And let's go move into the dollar yen. Well, we were looking for 1187 here on the dollar yen for this market to go and push up to. We got that when we got this 38-minute close here, taking out these highs. It suggested, hey, look, this opens the door now for us to move higher. Now we actually continue to dip lower, but the momentum had already shifted where they're going to defend this thing on pullbacks, and it was how high can we get? And we did make it up to 1190, and our area for resistance was 1187 that we had marked off here. I don't see any reason to change that. That's a resistance level that, for shorts to go and step in if you're inclined to play it that way. And we did see a pretty good little pullback from that, kind of mixing it up right here. So the 1187 stays in check, and on the downside, keeping it relatively tight. Well, if we do see a pair back, which we can, we're going to go right here. $11.35. If the market would turn around slightly, and it could be open to slide if we got these S&Ps ever to go and pull back. I think that they're just way overdone. I don't even get this. We'll even take a look there. So it's 11.35. On first look. I mean, if we were to get a dip into the S&Ps, I think we'd eventually break lower, but on that first go round, you'd get a bounce from that area. This is a huge area here. Just absolutely huge. I posted this before in the room, I think like a couple of days ago. That 28.25 is big. I think I've seen other people talk about maybe going to 28.45. Look, that's going to be a tough row to hoe if you're trying to get above 28.25. I really do think so. That's on a daily chart. Now, one of the things that gets me is, frankly, I don't even get it. I really don't. I mean, we've seen, was it the OCD or whatever, writing down, the outlook for global growth, the ECB winding down their thing, China, like I said, going down like a submarine. And like I said, people can laugh or dispute that, but you just show me the economic reports. It's one after another, after another, after another, after another. Just continue, the worst in, 2 years, PMI is the worst in 4 years, other reports, the worst in 16 months. And then trying to just add every bit of stimulus, throwing everything but the kitchen sink. At the same, another one today, they added some more, talking about more stimulus. So I just don't see how we're holding up in here. I really don't. I would think that we'll start to pare back. The only thing is that a lot of people were looking for potentially a slowdown, and it looked like the market or the economy, U.S. economy, continues to hold up very well. That being said, I think we've had one heck of a stretch, and I would expect us to go on and pare back from this 28.25. And now, like I said, now that I don't know if that's going to hold true or not. North Korea saying they may, discontinue their talks. So once again, like I said, I don't even see how this market's even hanging around here. And certainly that would have its opportunity to have its impact on the yen. But we're just still hanging around here. We're still holding up here, but I would expect this over time to see some dip. Now, to what extent, I don't know. I'm not going to go overboard, but I would expect a move at least to this initially to 27.85. Really, before we got a meaningful bounce, we'll probably bounce there. It'd be more towards this 27.75-ish area here. But we're just holding up in here. I don't, like I said, I would eventually expect this, and not eventually over time, but in not that short order, be able to struggle to try and make this move to hold this area here. But we'll see. And I was making that case in light of the dollar yen because, as I said, we did make this move up here to 1187. Now on the dip lower, remember that's been key daily support 1136. Well, we got here at 1135. If we're to dip, you'd see a little bit of short cover, maybe a bounce back up to about the mid 50s, and then we could rotate lower, and then eventually we'd be going towards that 1095. Remember, we had that 1095 before support, and we saw the market hold up very well against that area here. But like I said, just looking further out. Let's go and move into the cash dollar index. Last week as we were closing out, the dollar index was reasserting itself. And as I came into the week, that was my concern, is every time it looks like the dollar index is going to fall apart, it turns around and turns higher. And about every time it's about to, wow, it's amazing. This thing's going to go to Venus. It turns around and pulls back, which is what we saw. I mean, initially to start the week, we had our support going down here to the pivot at 97.09. And then we got below that, we popped back up. And we're starting to rotate a little bit lower. Look, I think we can make it down here to this 96.30, and that may coincide with the euro getting up here towards 13.60, if that's the case. But really, I'm just going here, just looking straight up against the dollar here. And I just think that, like I said, that I don't think it's the dollar's going to come apart or anything. It's just the plain old technicals. And I think we're going to have to move down here to this 96.30. So we're going to put this here. Now, whether that happens today or Monday or Tuesday, but I think that we'll make it down to 96.30 just from a technical move. Just that's it. The market's going to have to do a little bit more work here. Let's take a look at here on the 2-hour. There's the real pivot, the 96.08. And we may eventually make it down there. But in short order, I think we'll come down here towards this 96.30. Resistance will be there at 97.01. I think that might even be tough to handle. We'll go with 96.95. Let's go move into the XAU. Well, we came pretty close. This was our area. Remember 13, 14, that's a 50%. It was also confluence with this level, and we made it up as high as 13.11. And almost 13.12 when you look at this. I'm surprised we didn't come up here and tag that 13.14. But we did back down here. Mixed bag here on the gold. I'm going to stick with this 13.14 on the upside here. We had 12.98. We dipped as low as the 12.93 area here before popping back up. And support on a short-term basis, we'll go with 12.96. Now let's go move into the bonds. Well, we've held our support. We had 65.45, and the low so far has been 65.42. Right in here. This is from the days before. So we'll call it 41.5. They've really tightened it up now in the buns. Resistance will be 66, 67. And the 66.45 has been holding up. Look at here on the daily. Yeah, let's go with 66.18 on the potential that we can rotate lower. 66.18. And if you look at this on the 2 hour, you can see where this 18 comes in. Right there. See these touches coming across here? So some good value coming in right there. Let's actually call it 66.17. And be just one moment. Okay, and let's go on and move in now to DAX. Well, we had 11,735, and this market is kept in check very well. And once again, I really just don't see how it's possible, but how these S&Ps can push much further higher, and it's certainly going in keeping this DAX in check for now. And I don't see if we're going to be able to have that drive unless these S&Ps try and close out the week a little bit, push higher earlier in the morning. There's not really a significant report. We've got industrial production, so I don't see the catalyst where the S&Ps are going to be able to push a whole lot higher, but we shall see. In the meantime, I am going to wind this down from the 735, and just the resistance coming in right there, which is going to be 11,677. And for support, we had 11,586. That kept it pretty much in check there. We actually dipped as low as 543. If we do get a slide, now, and we probably won't see that till next week, we'll go with 11,510 right here on the DAX. We're seeing the Aussie yen pair back a bit here. Here's that 79.02. If you look on the dip back here, we're sticking with this 79.15 we had. And as far as support, if you're scalping around, it comes in right there at 78.92. But the real support, at least initially, is going to be 78.71. 78.71. But here was a key area here. We had broken this downtrend line. I think we'll have to come back and test this. And this is also the 61%. We pop back up here. Let's take a look what we. And that's on the initial run. I'll move towards the 78.91 if you're scalping around on this thing. This is a good area to come in that we had here at 79.15. I don't know if anyone took advantage of that. Same thing with the dollar yen at 11.87. Missed the top by what, 3 pips. This one missed the top by 10 pips. Once again, if you're looking to scalp around, support will come in at 78.92. I think it's going to have a tough time trying to come up in here. I'm talking about the S&Ps. But they are holding it. I mean, it's a levitation act so far, but that would be very, very tough. I don't know what the catalyst would be to try and push us beyond 28.25. I just don't see it. Revisiting the dollar MEX, this looks like in pretty tough shape. We had made this run. We talked about the importance of this 1960, and we caught some longs on the bad side and took that dip in here. And I was talking about this being a good value area of 1931 for a longer term move up. But we are seeing the dollar continue to dip here, and that may lead us lower here. And then on top of that, when you've got crude oil still pushing higher, so even though I think this is a good area overall, you've got some factors working against this pair right now, with the dollar weakening itself and then crude oil still moving higher. Really opens the door for this market to move lower. Eventually they may make it down here to this 18.5. We'll see how today plays itself out, but certainly from a technical standpoint, it doesn't look good. I saw the video with Grega and Steve. It was very good. It was very good. They're making the case for a much slower move, and I mean, for us to go on and break down, certainly looks like a possibility here. Euro continues to hang around here. Now we'll see. We may go and hit some moves late in the day to push us up towards that, challenging the 1340 and much higher up towards 1360. We shall go on and see here on that. But other than that, that's about it. As we get prepared for the day ahead. And thanks for joining us here on the European Crossover webinar.